Hey, this is Jared with Bear Bull Traders, and this is my June 1st trade recap. Wanted to go over pre-market prep. It's something that I do pretty much every day, and I've got the June 1st trading prep video loaded up here. You'll see that in the alerts section. Pretty much every day I'm posting sort of a high-level overview of different sectors that might be relatively strong, relatively weak, or in some way interesting to the overall markets. Last week we saw financials be somewhat weak. Tech was strong into the close with some of the announcements made by President Trump. And healthcare was actually very strong into the close. So I was looking at those three sectors pretty heavily. We also had some news on Pfizer leading to a gap down in the morning. So healthcare being strong last week might have been interrupted by Pfizer's gap down. So looking at tech, looking at financials to lead the way for the two indices that I tend to watch throughout the day. Was also looking at semiconductors using a SMH ETF and wanting to see a breakout occur on the daily, but they started off with a inside bar today, so I wasn't really expecting too much. Nvidia and AMD were candidates in the semis. Didn't really see anything else outside of Pfizer and just your general candidates in the S&P 100 or the NASDAQ 100. And you can see that my main focus today was going to be on Tesla. Tesla had a very obvious consolidation period on the daily. We had great bullish momentum volume into the close on Friday, which I called out in the chat room. And a shout out to those who were profitable on that call out. I know a couple people gave me some congratulations today with the gap up. And I was looking to get some of that action today with Tesla. Space to some degree also looking relatively strong, and pretty much all of the sports betting / gambling stocks, they all seem to be high volume, high price action momentum today. So wanted to show just my watch list as well relative to the idea of pre-market prep. I pretty much have all of the Spider ETF sectors on my watch list near the bottom. And every day I take a look at the overall indices by Qs and IWM. I see which ones are strong and which ones are weak. And I look at the Spider ETFs to see if I can find some standout sectors and potentially standout candidates in those sectors. Typically, you're looking for something maybe 1% different than the overall market. So if SPY is up 1 and you see a sector down 1, that's a pretty big change or a difference between the two. And then if Qs are up 1 but tech is up 2, well then maybe tech is even stronger than the Qs are representing. So you can really focus on that sector for continuation and momentum throughout the day. But for today, I traded 3 stocks. I've got the SPY, and what I did on the SPY was sort of a price action read and a resistance turn support. So on the 1 minute, you can see the SPY have been trading a gap below this level. Last Friday close was kind of trading below this level, had a breakout. It can be hard to see the volume, but the breakout was significant volume at about 7 o'clock in the morning. Traded above this level and was just kind of waiting to see if I can get back to this level and find a good entry for what I expected to be a bounce. We also had some 8:30 news come across the wire on Benzinga around this time, so watching level 2. I jumped in at the break of this level, 304, about 34. It was half size due to the pre-market liquidity and the spread, so wasn't able to get any partials up into 304.78, but was looking mostly just to re-add, maybe a retest of some of these moving averages and then continuation into the market open. Unfortunately, the news kind of rolled over and I got a 0.5R stop out after the break of this level. Was also looking at space. I wanted to accumulate a position after I saw the range of 18 to 20. We had our sell-off into about 18 actually, so a double test of 18. A higher low made and sort of a trend being formed. And I saw what was, in my mind, an equilibrium break forming. We had sort of that retest, high, low, and then lower high and higher low. So I tried to get in here expecting the break, and I saw the volume increase, but we chopped around a little bit longer. It wasn't quite the setup that I was looking for pre-market. Market open, I got into full position around 1832, 33, and stop loss below 1815. Was unable to get a partial again, which was frustrating after my SPY trade. So got into another position here, still hadn't partial, but I tightened my stop up to about 1820. Which was the low of the prior wick. We got some continuation, then a huge sell-off, actually quicker than I was able to get my stop out, so ended up taking some slippage and got a 1.5R loss. Adding to my SPY loss, I was down 2R, wasn't really looking great for the day. So decided to focus my attention on Tesla, and you can see without too much a lead up, my first trade was horrible. Basically, Tesla making an ABCD. I was seeing the 9 and the VWAP starting to cross. So I anticipated the move, got in at about 863.70 with a little bit of slippage. And my stop was supposed to be below 860. So wide enough range. I was, everything was kind of lining up against the ABCD, setting up pretty well. You saw the increase in volume. And then out of nowhere, huge slam down candle. We pretty much dropped this in a matter of seconds. So my stop was not in at the time, and I ended up taking a 2R loss on this drop. So super disappointing. Now I'm down 4R on the day. I'm kind of taking a step back saying, okay, do I want to keep trading today? I've taken 3 trades, 1 pre-market, which doesn't count to my daily 3 trade goal, but I had a disaster stop, a more than 1R loss on something that was supposed to be pretty simple 1R. What I ended up doing instead was watching Tesla, because it was my main item for the day, my main watch. And after this huge liquidation sell-off drop, not a ton of volume, and immediately bought up with no pullback. So I said, okay, this was basically a short trap. Anyone who got short in here expecting maybe VWAP to hold, selling off, breaking the lows, everybody's getting squeezed. So now I'm looking for another entry. And what I decided to look for my entry was not only VWAP, which is always going to be important, but the high of this sell-off candle, which is about 864. I was looking for that to hold as support. You can use the prior high as support, but it seemed a bit extended from VWAP, and after the huge volume slam, I wanted to really see buyers stepping in for a continuation move higher. So patience paid off. I was able to get a very tight stop. And was able to take my first partial into 872.50, the prior high. Once again, made a mistake. This was supposed to be a partial, ended up getting all out. So this was a 2R move. I got 2R profit, but I was supposed to only take some of my position off. I let it continue. It pulled back, had a trend line, volume confirmation that it wants to test and re-break the trend line. Got in anticipating the break, got the break, partialed into 878.80. I just put my limit above this high once it formed in the micro time frame. Partialed into 880. And then I was looking to see if we could continue past a daily gap, which you can see here, this gap being filled between these two candles. This low was 880.45. We did get some continuation, but it got super choppy up here, and I was noticing the level 2 start to shift more into a bearish tone. So after this engulfing failed, didn't really continue, I went ahead and got all out of that position. The combination of these two trades was able to recover the 2R loss at the morning trade and make 3R on this final trade. So overall, profitable on Tesla, pretty much making scraps from the SPY loss and the space loss. Switching over to the Thinkorswim platform, I wanted to get long Tesla using options, but I did have a challenge to get over when it comes to longing a call. Tesla is a fairly high price stock, and the options reflect that high price and the high volatility. If you are trading in a small account, you always need to be aware of the bid-ask spread when trading options. And Tesla tends to have anywhere from $1 to $3 wide bid-ask spreads for calls and puts. If your account is small enough to where the bid-ask spread is too wide, you technically shouldn't take the trade, because as soon as you get in, you're already down the maximum amount that you're willing to risk on a trade. So I knew longing a call for this account wasn't appropriate. I took a look at some vertical call spreads as well, where you buy a call and you sell a higher strike call against it. The issue that I found with this was they were relatively expensive. Typically, the width of the vertical is the maximum amount of profit you can gain at expiration, and these were selling for about half the cost of the max width. So given that it was a day trade and given that Tesla was very bullish in my opinion, I wanted something that had a lot of upside potential while still minimizing my risk and could realize a lot of that potential in the course of a day. So I knew a vertical spread wasn't the right way to go. What I chose to do instead was open up a back ratio. So you can see here, I opened up my back ratio at about 8:30 in the morning, 8:35. I sold an at the money call, and Tesla was at the money around this time, 8:65. I bought a 8.95 call against the 8.65 for protection. So you can think of this as a sold call vertical, or a credit call vertical. And then I bought an additional call to reduce the cost of the entire trade and also to reflect a more bullish upside outlook. So the way I construct these back ratios, typically I'm selling at the money, and Tesla's trading for about 8.95 at the moment. So we can do 8.90 for now. This cost is about 2,800, so I want to buy against it and minimize that cost as much as possible. So I buy a 940, I reduce the cost by about half, and then I buy a second one. And now you can see that, given the spread of Tesla, this is turning into a credit as opposed to even a debit. So I'm actually getting paid to open this trade. And we can look at the risk reward. You can see that the downside risk is relatively limited. You have a little bit of a downside potential as soon as you open the trade, but typically this smooths out over time. And then as you move in the bullish direction, you do have a valley of death that you have to get over. And this is where the maximum risk can be encountered on the back ratio. But if you notice, the valley of death is not realized until the trade reaches expiration. So Given that this is a day trade and given that I have multiple days in the trade to avoid a downside dip, you can get long these back ratios and realize a lot of upside potential, very similar to a call. If we look at just a call spread against it, you can see that instead of paying up front and risking potentially some of the amount that you pay, you get the back ratio looking very similar and smoothing out that valley of death by not buying too close to expiration. So using a back ratio, I was able to get long Tesla. I didn't have to pay too much up front, although my buying power was still restricted due to the fact that I was selling a vertical in the back ratio spread. And given that I'm super conservative, I went ahead and exited at 100% profit. Tesla ended up going much higher throughout the day. And if we look at the order now, this particular back ratio is selling anywhere from 7 to about 10. So a lot of potential in these. If you open them up with enough time to expiration, you can turn a day trade that's profitable into something like a swing trade and realize additional profitability as your bullish thesis works out in your favor. And that concludes my recap for June 1st, 2020. Hope everybody enjoyed the variety of topics that I provided in the recap. We went over a little bit of sector rotation, some market analysis in the pre-market, actual day trades, and how to come back from a couple of hard-hitting losses in the morning. And then looking at options, how to get bullish in different ways, and the pros and cons of each of these types of option spreads and contracts, trying to reduce your risk, especially with time, and avoiding a lot of theta decay. So, as always, feel free to ask questions, reach out to me at Bearable Traders, and as always, have a great one. Thank you.